to be here, and thanks for showing up the first thing on a Saturday morning. Last night I was at the bar session of Nate Silver and Mark Penn on why predictions fail, and it was really fascinating discussion. And there's been a thread here, and there is here at Aspen generally, on the future. What do we know about it? How can we profit from it, or at least avoid regrets? My blog is a question. Most blogs, most columns in the New York Times or elsewhere are about economics or about sports or whatever. And mine is, how do we head toward roughly 9 billion people with the fewest regrets? Meaning we're not going to have a perfect policy. We're not going to have we can't rely on clarity in a complicated system like the global system, like the climate system, like social systems. The idea that you can chart a clear path has shown to be a failure many times. And just look at the last few years in energy, particularly in energy. Predictions almost always fail. Vaclav Smil, S-M-I-L, I'm not sure if he's ever been here, but boy, he'd be a great person to have here. He and others have done work, analysis showing that the EIA, the IEA, you look back through history at predictions of energy change, and you see failure is the norm. And so what do you do? If you're Shell or Obama or a journalist or an entrepreneur, how do you dive into an arena where you know that the breakthroughs are not something you can anticipate right now? Well, Shell 40 years ago came up with this. They didn't invent scenarios. You know, the military throughout the history of war have been figuring out game plans. Well, if they do that, maybe we could do this. But the idea of scenarios as a corporate structure, a tool, a mechanism, not so much for predicting what we think is going to happen in 2040, but for bounding the possibilities of what might happen by 2040 or 2050 or 2100. And of course, the boundaries get really big the farther out in the future you go. And then saying what traits, how can we shape ourselves, whether it's how we do our investments, how we train our executives to act with the most agility and creativity in a landscape like that. And that's why the Shell scenarios are not. They have this proprietary initial, they share them internally and get the advantage there, and then they bring them out to the public so that we can all have a sense of what do you do about that. And that's where we are with the latest batch. So it's really important to think about this, as I think, especially for me, and I've written about this recently, in a complex world with a lot of unpredictability, the best thing you can do is not seek a climate bill, for example, on that front, but what traits do you want in a society that can lead toward the least exposure to climate hazard and the most chance of moving away from fuels or ways of using fuels that we know have long-lasting outcomes? And I just think that's the key message here. But I'd love to introduce you to Marvin Odum, the president of Shell Oil Company, and Jeremy Bentham, who's the head of Shell's scenarios team. And we're going to explore, in a brisk hour, with your help, some of the insights that have been gained by this approach, and also how it works. But Jeremy, first, could you just instruct us on the difference between a prediction and a scenario as a starting point?
That's great. It's good, isn't it? We are all interested in the future ourselves, but we've just been talking about our kids, in my case also grandkids, and so we have a stake in this. And one of the features about dealing effectively in thinking about the future, either in our professional lives, in the decisions that people like Marvin have to make and others, but also in our personal lives, is can we recognize things that are helping us make better decisions? And we can't recognize something unless we've seen it before. It's almost in the nature of the word, isn't it? Recognize, to understand. And so one of the aspects of building scenarios and the social way of using them to help people go on a journey to understand things better is to explore a landscape and understand what are the key features of that landscape, but also what are the key uncertainties within that landscape. I like to think of it as a craft which combines the craft of the content, the stuff, all the analysis. People look at us as a company and know that we're a pretty nerdy, technology, numerate sort of set of people. People refer to us sometimes.
Now I'm shifting in my chair.
But it's kind of true. We're kind of techie types. I myself was fortunately educated here in the United States at Caltech and MIT. Those are fairly techie sort of places. And there's that background to it. But it's also about recognizing that, have you heard of the philosopher Schopenhauer? I'm going to slightly misquote him. I don't speak German, so I'm allowed to misquote slightly. But he talks about new insights being first ignored or ridiculed, then violently opposed, and ultimately taken to be self-evident. Yeah?
Right.
And so there's a kind of a journey there. And so
you can see that in how newspapers cover stuff.
So part of our work is about helping people along that journey. And it's not just that there's a set of insights that you stealthily try and get into people's minds on that journey, but we create a sort of a corporate sandbox where decision executives can play and discover things for themselves. And so in that way, we believe that this kind of work creates us a more thoughtful and a more agile sort of company. You used the word agile.
Yeah. So before we get into the specifics of a couple of these two scenarios, as two visions that are specific to this new output, I wanted to get from you a sense of this whole idea of decision theater, this approach to these kinds of issues. It seems to be growing in popularity. There's the University of British Columbia and Arizona State have decision theaters where they get people together, whether it's city planners in Arizona and Phoenix, to try to hash out the same thing. Is this an emerging norm in this arena of management or not?
I'll speak first and then I'll ask
Yeah.
Marvin to add to that from his perspective. First of all, we do...
By the way, before you go ahead, is Shell, within its field, is Shell unusual? I mean, does Exxon, because the only one that I hear about is the Shell.
All good companies have analytical departments and do things well. We probably have a broader perspective in the sense that we have a good set of world-leading economists and energy analysts. But we also have geopolitical and international relations, and we have socio-cultural developments, and we try and understand how these complex systems may work together. So I would say it's to do with the breadth of the approach that's taken.
And so what is it about Shell that's made it a good, sort of enthusiastic about this laboratory or sandbox kind of approach?
Well, I think partially, Andy, it just comes from experience. So I think one of the things that it helps you to recognize is how entrenched you can become in the way you think, what you think the kind of background assumptions are and what you think is going to happen in the future. And this sandbox that Jeremy talks about, once you jump in there and you're surrounded by people who are challenging you on every front around those assumptions, whether it has to do with a specific business proposal or whether or not to enter a new country, as far as business goes, it really opens your mind and I think gets us to a better place.
So let's get at the oceans and mountains. Some people here might have scanned the website. It's shell.com/scenarios.
Yeah.
But can you sort of encapsulate, maybe each one of you could take one. Yeah. You do oceans, and I'll give you my impressions of them too.
Okay. Well, let's take them through. Maybe I'll say a little bit about the underlying patterns, and then Marvin, you say something about the energy, and then I'll add to that. Maybe that's a way to do it. The world looks different according to who you are and where you are. That's obvious, and the choices that you make in relation to that shape different possible outcomes. And it's certainly the case that as you look around the world, you see the way that people are becoming more or less influential is very much a factor in what's shaping the world. Effectively, if you look at kind of even just global family income, the globally poor are essentially remaining globally poor. But there's a large emerging middle class, and then there's an area which is actually a squeezed middle class in the world as well. And then there are those who have always been well established with privilege and influence, whose influence is growing. The world looks very different from each of these different perspectives. And if you see the kinds of patterns that are taking place, we find two basic patterns that are helpful for us thinking about that development. So the first pattern is called mountains. And without even going into the details, just kind of, we're on the mountain. Yep, you just think of that characteristic of the mountain. You know, the benefits of an elevated position. How difficult it is for some to climb the mountain. There's stability there, but there's rigidity as well. People do find it hard to climb the mountain. So it means that in areas that are quite significant, the strength of the incumbent vested interests acts against core economic and political reforms. So this is a world where you can get sectors of society not being unleashed productively. There are disappointments. Some emerging nations, like so many in the 20th century, fall into middle income traps. And that creates disappointment, greater nationalism, greater protectionism in this kind of world. But also, this is a world in which there are a limited number of the most powerful and influential actors. So governments can still act and align interests. So as in a mountain, when the forces align, you can get avalanches, and some things can move quickly. So while some things are locked in and move slowly, other things can move quickly. So for example, disappointment often focuses in urban settings. 2 weekends ago, I was in Istanbul. You know, the world's focus was on Taksim Square in Istanbul. Urban settings. And so there's a real incentive for national authorities, municipal authorities, project developers to develop more compact, efficient, livable cities, environmentally friendly cities, to offset some of the economic disappointments that can occur. So that is an area that can move quickly. In an area like the development of tight gas and shale gas, these are developments which we've seen in North America, which may or may not be replicated elsewhere. But in this kind of world, the forces can align to move that more quickly. So that's a little bit of a sketch of the mountains type world. So the pattern there is that advantage creates more advantage. I'll take you down into the oceans world. The oceans world sees a different pattern. You know, the pattern of vast, fast-moving currents. Now, this is a world of acceleration. You've seen the way that also in the 20th century, what took a country like the United Kingdom, where I came from, a century of economic development in the 19th century to do, was achieved in Japan in just 50 years, in South Korea in 25 years, and in China and India in just 10 years. So you can get this acceleration, this unleashing of productivity. But where there are currents, there are also countercurrents. So you have more empowered actors, you have more activism, you have a greater difficulty to align interests. And so this is a world in which some directions can be very, very difficult to move in. So if, for instance, it's a world in which it becomes more difficult and it slows down those developments in the gas field. But because it's a tighter world with greater economic development, you have the sort of price environment under which renewables can come through more quickly. So without delving down into more of the evidence and the energy, I'm going to hand over to Marvin to say a little bit about the energy.
Yeah. But and also, how does this translate into the boardroom decisions? You know?
Yeah, and actually I'll go straight there because I listen to everything that Jeremy says. It's incredibly informative to us as a company, creates these great debates. At the same time, we're investing about $30 billion a year in new projects, and we need to make decisions on where we're going to put that money. And the scenarios tie very directly to those decisions because most of these investments are commitments we're making for a 20, 30, or 40-year time period. So we very much need this kind of view out into the future. But then as we decide how much of our portfolio we want to invest in, you know, the topic of the day, which is shale gas or tight gas around the world, it's informed by these views. It's tested against these two scenarios. And I'll just jump to the bottom line. It maintains a very significant position in our overall investment. If I think about another potential investment that we would be considering right now, it would be taking some of that natural gas and using our gas to liquids process, a technology to turn it into a permanent liquid, which you can put right into a diesel stream and use as a liquid fuel. So
Right.
instead of coming from oil, you can bring it from natural gas.
Yeah, Qatar Airways is running some planes.
It's
on
actually running airplanes on it now. So you know, it's a tremendous technology, huge opportunity, but we have to think through, you know, the social, political, carbon intensity, all the different aspects of that to know whether or not that's the right $15+ billion investment to make over a couple of year period of time.
On those long time scales, particularly, that gets interesting in a hurry, I'm sure.
Yeah, it's a challenge.
Which is one of the issues with climate change is the timescales are so huge. The cumulative nature of carbon dioxide means that decisions made now, especially with this burst of energization of Asia, that impact will linger for millenniums, actually, in the atmosphere and climate system.
And I'd say, Andy, too, in addition to informing our investment choices, it informs our advocacy as well. So, you know, I've been up here for a number of years now, recognize a lot of faces, and we've advocated for a price on carbon for quite some time because we think to, you know, not to pick one scenario over another, but to move the world in the direction that we think we need to go. It's clear that we need some firmer policy around issues like that. So it informs the advocacy as well.
But looking at this sort of multidimensional nature of these scenarios, which one, do you see oceans or mountains being more amenable to a price on carbon? In other words, which is a sort of a top-down, strong governance, let's put an EU-style approach as opposed to a United States approach. And so how does that happen or not?
Well, if you're able to chew over the scenarios, and obviously I'd invite you to chew over the scenarios. So do take a look. And I have a 15-year-old son. It's called James. He thinks I'm the least cool person on the planet.
He and my son could have a fight over who's the least cool person on the planet, because mine thinks the same thing about me.
But he does think that the app is quite good. So you can actually download an app from the iTunes Store or from Google Play and play with the app, which is quite good. Cool. So you can kind of see it for yourself there. Yeah. But if I just contrast the energy side of the scenarios a little bit, when we look back in 50 years' time, you'll see that there's been a mixture of both mountains and oceans. But let me just contrast them for the moment. So in the mountains outlook, you have a combination of extraordinary demand growth moderation in the globe and extraordinary supply acceleration. Now, the demand growth moderation is coming partly through the economic sluggishness, the disappointments, but also partly through these very energy efficient infrastructures like more compact, efficient cities. I don't know whether you're aware of it, but the average US citizen uses 3 times as much energy for personal transport as the average European citizen. And partly that's because of the size and efficiency of vehicles, but it's actually largely because you drive twice as far. And you drive twice as far because of the nature of sprawling cities with poor public transport. And so the mountains world has that also on the demand moderation. On the supply acceleration side, you're getting the replication of the North American experience with tight gas and shale gas and liquid-rich shales elsewhere. And so that's really accelerating through that. Oceans also has these demand moderation and supply acceleration, but in different ways. Mm-hmm. The demand moderation actually comes through the price effect. So you've got this upward surge in global economic development, creating a higher price environment, which has a depressing effect ultimately on some of those demands, but by boosting end-use efficiency. So end-use efficiencies, more efficient cars, more efficient lights, more efficient buildings, etc. On the acceleration of supply side, with that higher price environment, you're bringing through, of course, more expensive energy sources like enhanced oil recovery and heavy oils, but also provides the umbrella for solar to come through. So in mountains, by 2030, the largest single primary energy source globally could be natural gas. But by 2060 in oceans, it could be solar, could be the largest single global primary energy source. So these are different kinds of outlooks. Now, interestingly, from a carbon dioxide capture, carbon dioxide in the atmosphere point of view, there's quite a surprise. In the mountains world, you're moderating the use of energy, but you're also bringing through gas growth more than coal growth. And you also have the situation where major projects, such as carbon dioxide capture and storage, can be brought through by mandate or through policy decisions. So you actually have a relatively moderated outlook on carbon dioxide capture, on carbon dioxide in the atmosphere, cumulative emissions. In the oceans world, you actually have that extension of the period in which coal and oil are dominating until solar comes through. And also because of all the different levels of activism, it's hard to get arrangements and agreements around different areas. So it takes much longer for carbon dioxide emissions to be moderated, greenhouse gas emissions to be moderated in the oceans world.
Yeah.
Even though you've actually got a higher proportion of solar in that world.
Which is a paradox on its face, but it leads to, well, there's so many questions to get at. We're going to get to your questions in a few minutes. Is there, China being such a dominant force going forward, and India is kind of in the background coming up, do you get a sense that they're more oceanic or mountainous? If you know what I mean.
Yeah, well, maybe one of each, I don't know,
Yeah.
but certainly I'd see China more in the mountainous category.
Right.
But I think I'd put India in the other category.
Well, and they're also moving pretty aggressively right now to tamp down the pollution sources in China's cities by mandating closing the dirtiest coal plants and shifting to gas where they can. But this whole question of gas flows or the potential for China to harvest its own gas is a huge and consequential question for climate and also for commerce and everything else. So could we just talk about that briefly in terms of how these scenarios illuminate that question?
Sure. Well, I'll kick us out there. I mean, because we're very active in China, it may be, I'm not absolutely positive this is true, Jeremy may have a view as well, that we may be the most active of the international oil and gas companies in China, working with the Chinese on developing these shale gas resources. And what I would tell you is it's still very early in the game. So we've drilled a number of wells, we're testing several different areas. I think there's quite a bit of optimism around the resources that likely exist there. But it's still in the early phases, and we need to keep that in mind. And I think if you watch China and their planning, and of course they're very careful and specific planning, you see them looking at those various sources of natural gas, be it liquefied natural gas coming in along the coastline, all the way through to developing their own resources. And I think what we'll probably see is China, I believe, would be very happy to have natural gas take a much larger share of its energy mix. That's going to be determined by what's actually available and what's there. So I think we'll see those policies in China change as this resource gets identified.
But on the same side, societally, they've built this ballooning middle class with lots of expectations for continuation of ballooning, but some limits on that growth are pretty clear. Could they end up with the Istanbulish kinds of situations too? It's so interesting how a few decades ago it seemed to me more common to think of the poor masses as the ones who foment tensions that can really destabilize countries, but now it seems the middle class if you have a youth bulge with no youth opportunity, for example, it's a real big deal. How big a force could that be, the force that can asymmetrically just sort of destabilize a situation like this?
I mean, it certainly is. I have the privilege that for the last 2.5 years, my team have been working with the main policy wing of the Chinese State Council on energy pathways for China, just trying to understand the different areas there. So I fully support what Marvin said about their view on the significance of natural gas, but also the recognition that it will take decades for them to build up their infrastructures and their industry to be able to replicate what's happened in North America, which was very much a sweet spot.
And so much is going to be happening in China in those same decades demographically.
That's right.
They're actually going to end up having a population problem in the inverse, not enough young people to be in that workforce.
That's right. So there's definitely tensions there. And the leadership, if you speak with the Chinese State Council policy wing, they recognize that. The question is, politically, how effective are they going to be able to be in the first thing, reforming the Chinese financial system and the banking systems so that investment gets directed into areas in which it's more productive, and also individuals are able to effectively address their own longer-term welfare issues. So there are all these tensions around, but there are tensions in every single nation. I'm not going to emphasize China over somewhere else. But you can see in our scenarios how a nation like China could get caught in a trapped transition rather than having the room to maneuver into the continuing unleashing of productivity.
By the way, just going back to the history of the scenarios exercise, in the 40 years, were there any jarring examples where scenarios led Shell to conclude one thing where it played out in a completely different way?
Let me kind of put my hand up here, right?
Okay.
Yeah. My biggest lesson, and so obviously I haven't spent my career doing scenarios, you'll understand that. I've been in every sort of part of the business. But in the late 90s, I was part of I was a manager of corporate strategy analysis and contributed into some scenario exercises back then. And at the time, there were two outlooks. And if we just look at it in terms of one single parameter, one outlook had a low oil price, and one outlook came out and had a high oil price. And those were kind of the areas then. And I was asked to lead a team to look at the low oil price world. Because at the time, if you remember the late 90s, there was the $10 a barrel oil time. Did you remember that? Yep, okay, so you remember that. Okay, so that was that. So I led a team, and we effectively laid out what mechanisms it would be for that type of world to continue, and also the types of steps that Shell could take in that kind of world. It wasn't saying that this world was going to continue. In fact, it laid out the 5 things that were necessary for it to continue. Now, unfortunately, it turned out that we were particularly good storytellers. And so we told this story, and it met with the prejudices of some senior executives at the time as to how they felt the world was going to work out. And so Shell, instead of thinking broadly about scenarios, locked in to one forecast. Locked in.
Yeah.
That was where it was going to be.
A low oil price forecast.
A low oil price forecast, and made a series of stupid decisions in hindsight. But what was even more stupid was that people like myself were rewarded for having done a good job and sent off to do other things, and fell out of the loop of these discussions. And nobody was flying the flag that said within 2 years, every single one of those 5 factors had turned around the other way. It was clear that it was not going to be that, but the company still locked in. Mm-hmm. So Shell had to learn itself, or relearn the lesson that look at the landscape, explore the boundaries, use scenarios to be smart, don't lock in, and just drive, in this case, in the wrong direction.
I don't think Jeremy should be too hard on himself, because it only took 10 years to recover from that. So
okay.
But I think I can also give you a couple of positive examples that we hope are positive.
I was going to ask.
We hope are positive. Yeah. And we're watching the indicators.
Otherwise we could all leave.
We're watching these 5 or more indicators right now to see if these are the right choices. But Shell's shift into natural gas. I mean, the company that I run is called Shell Oil Company. The fact that we're now actually at the point of producing more natural gas than oil, that's not by accident. So that's a view of the future informed by scenarios that says we go that direction. The fact that we're now one of the largest biofuel producers in the world, in Brazil, with sugarcane, which doesn't require irrigation, is informed by some work coming out of the scenarios around the food, energy, water stress nexus that leads us in that direction.
I was going to ask about that as a specific example. A few years ago, the whole biofuels versus food, once it became clear that you have choices, if you're growing something on a plot of land, it becomes fuel or food, those markets become intertwined. But one of the points was this is a nexus, there's not a simple trade-off, it's not an either-or thing. So, and it sounds like there are informative choices that can come from that.
Yeah.
Like if palm oil in Indonesia is a whole different question then. So maybe you could talk briefly about that reality, that most of these exercises don't lead you to a single outcome.
No, I think, again, you're just taking that example there. It's where you kind of have to chew over and dig deeper. So, for instance, if you're making some kind of corn ethanol in India, you're talking about needing 3,000 litres of fresh water for every litre of biofuel that you're creating. Whereas if you're talking about rain-fed sugarcane ethanol in Brazil, you're talking about 90 litres on average. But if you do it smartly and the kinds of technologies that are being applied, Marvin can tell you more about those, with a lot of water recycling, bring that really right down. So the way that you do things can have a really big impact. But you do have to understand how these things connect. I mean, I've been told, being here, I have to have a hot dog. Is that right?
No.
Yeah, okay. So I'm going to have a hot dog. But whilst I'm in the US, you know what my very first US meal was in Pasadena all those years ago? It was a hamburger. I had a hamburger. I had a beef hamburger.
Right.
But when you eat some beef, you know, a highly kind of processed or high-end piece of nutrition, then each calorie of beef that you consume is actually got 40 calories of fossil fuel behind it. And each kilogram of beef, and I think that there are some steaks, certainly in Texas, that are probably a kilogram. They appear to be. Okay. But each kilogram has got over 15,000 litres of fresh water behind it. And so you need a lot of energy to produce and treat and distribute water. You need a lot of water to produce some types of energy. You need a lot of water and energy to produce and distribute food. So these things really kind of lock tightly together. And that's and sometimes troubling, because if these things lock together and you look into a world that by 2030 is going to be consuming approximately 40 to 50% more fresh water, more food, and more energy, then if stresses build up, they feed on each other. So they don't increase linearly, they can increase geometrically. And that's one of the things that we all have to continue to get our minds around in considering the stresses that growing prosperity is also placing elsewhere.
Well, and if I could just build on that, because I think one of the things, maybe this is already in the stage of being self-evident, but I think one of the pieces that emerged from all of this work that Jeremy's been talking about, particularly in the food, water, energy stress nexus, is that water was much more important than we had given it credit for in the past. And so again, trying to turn that into action, what do you do today based on that information? What we realized is there actually the data you needed to understand water consumption associated with various types of energy generation in various parts of the world just wasn't known. You didn't have the database, didn't have the science behind it. Yeah. So we commissioned a study to gather all that. And now we've shared that the same way we share the scenarios. That's available.
So the scenarios can actually lead to new knowledge gathering that can help refine scenarios going forward.
Absolutely.
So it's an iterative process. One thing I like about it is even if you get things wrong, you know, when you repeat, the discipline of repeating and reassessing, whether you're a journalist reassessing your own quality of your journalism, or a company assessing how you made choices, or a family figuring out how to.
We throw people into the sandbox fairly often. You got to.
So I want to bring in one more example for domestically before we move to audience questions, which is about President Obama's choices going forward. We had a session here also at the Belly Up a couple of nights ago on his choices and his speech, partially on his speech on climate change. It seems that a corporation has an easier task making decisions based on these scenarios than a country would, in the sense that America is very oceanic, if I get this right. There isn't a mountain. He's not sitting on a mountain.
Sure.
Congress is very oceanic. There's strong currents and polarization and tidal waves.
It's good that you can see these patterns. You can also see mountains here as well.
Yeah, but the thing about Congress and the thing about oceans is that there's a lot of sloshing, but not a lot happens. So Obama's staked some goals with climate, some of which he has the right to do with his authority under the Supreme Court decision, but much of which is still largely a function of what America wants and doesn't want. Presidents, despite the idea that they're leaders, still are mostly followers when it comes to that, and we still don't have a strong social movement around climate greenhouse action as opposed to climate resilience was different. So looking at these scenarios and looking at America and going forward from Obama into whoever comes next and onward, do you have a sense of the limits? If you got to brief Obama on the outcomes of these scenarios, do you think he could do anything with that information meaningfully?
Yeah, I think it would be,
CEO.
I think it would be important information
President
for Obama and for the administration, just like it is for us. So I think equally applicable from that point of view. That's a long way from executive power and how much you can do on your own and so forth.
Yeah.
But I do think it helps inform those. And in fact, we do share this information in that setting as much as possible. There's what was rolled out this week, which I've basically only had a chance to read summaries of it. But I don't think any big surprises there. I will give you an element of encouragement on my part, and that is, with Ernie Moniz coming into the Department of Energy, and I think a real in-depth understanding of energy issues and the trade-offs that we're talking about as you make choices in these areas. I think, the idea of some very well-informed policy choices, I'm more optimistic on that front.
Well, Jesse Osabel, a brilliant resource and analyst at Rockefeller University, once told me something years ago, and he wrote a paper on this. If you search for AUSUBEL and energy, you find it. That most energy policy is, what he said, is pulling on disconnected levers. There's a lot of big levers and buttons, and people are pulling and pushing. But most of what's happening, as with shale gas, is the resource is there, the economics either works or doesn't. People drill more when the price was high, and now it's kind of slowing down. It's sort of a there isn't a lot of.
I do think that's the way it really unfolds.
True?
But at the same time, I think you can see what's happening with natural gas in the U.S. and across North America, and it's clear what the drivers are of all that now. And it wasn't government policy that was driving that result. But I do think now there's an opportunity, for an administration that's very focused on renewable energies and in a future energy mix, to say, in this environment of expanding natural gas, which actually makes a lot of sense for us as a country, as an economic unit, also from an environmental point of view, how do we then actually also now put in a policy that helps promote the furthering of renewable energies, based on technologies, investments and so forth. How do we do
all
both?
of the above has to include policy.
It's going to need some policy, otherwise it is fairly random.
And you can end up going to sleep again because energy prices are cheap and secure. And
If I can just add to that, if I take some of the big lessons, and these are kind of global lessons to take out of this work. First of all, both scenarios have positive and troubling elements within them. There's not one better than another. In one sense, both address issues of global energy poverty, but both of them still have quite significant environmental stresses building within them. And the question is really not mountains or oceans. The future is going to be some mix of both. But it's how do you achieve the best of both worlds rather than falling into the worst of all worlds? And one thing that comes out from that is what I call the and mentality, or the both and mentality, rather than either or. You see the distinction? So, for example, you need both energy efficient infrastructures, more compact city development, more public transport, and you need end use efficiency. You need the smaller vehicles, you need the more efficient lights, etc. You need both cleaner fossil fuels, so gas growth offsetting coal growth, and you need carbon dioxide capture and storage, and you need the continuing surge of development of renewables. Because the battle is actually not between some of these areas, it's actually the challenge is time. It's the decades it takes for these things to have global scale. So if I look back into scenarios that we produced in the late 90s, they had two different routes towards achieving the aspirations on greenhouse gas emissions cumulative over time. Now, neither scenario achieves that. Why is that? Well, it's simply the world has drifted for 15 years. And so it's the battle of time. And then how do you actually get these things together? Well, policy and markets and technology and resources have to knit together, which means that business and government and civil society need to dance well together. But what do we actually see is that these different sectors of society tripping over each other's feet. And so it's not going to be just through policy. It's not just going to be just through business. It's not going to be driven just by the civil society. It's going to be driven by all of them. And we look to at least try and be constructive in various platforms and various prototype collaborations that we're trying to develop to be constructive in that field.
I think the collaboration part is really important, because this doesn't all have to be top-down, even though top-down is great, right, and it's more efficient when it can happen. But I think this also tells us that working across sectors with various companies and actually starting to work at the city level, because urbanization is so critical to the way the world will develop over the next decades. Understanding what are the right models, the smart models around urbanization. How can we play a role in that with other, whether it be waste management, energy supply, all the transportation, all the issues that will affect that setup. But then also at the same time, what we're thinking through is what are the business models associated with that kind of world. So where is Shell going to play? Sure. So it becomes a conversation that's a lot less about how do we defend the existing business to what is the business going to look like in this kind of world, and how do we set ourselves up to be there.
So now I'm going to open up for audience questions. There are mic runners, so don't ask your question until there's a microphone at hand. Right at the very back first, that one by the wall, and then the man with the striped shirt second. So we can...
Yes, good morning. Thank you for these extraordinary comments. I wonder whether I can ask the panel to talk a bit more about what sort of renewables are that you envisage coming along soon. You talked about managing gas, oil, coal consumption until solar takes over, was one comment from Jeremy Bentham. But are we going to see, in fact, a great progress in splitting water, in other kinds of technology which are going to replace oil, gas, and everything else in the foreseeable future? And if that is the way we're going, are governments making a mistake at the moment in putting lots of money into, I don't know, subsidizing wind farms and other kind of short-term palliatives? And should we be putting a lot more money into the research into something really clean and transformatory, like, for example, splitting water and finding that the combination of CO2, sunlight, and good old-fashioned water are going to provide our energy needs in the future?
Thanks for that. I'll kick off in the response there. Thanks for the question. And clearly, innovation and technology are an intrinsic part of the futures. And if you delve down into the work, you'll see there's some really quite aggressive assumptions about technology and technology deployment within them. In the renewable space, it's quite interesting. First of all, imagine that oceans world where there's a lot of activism going on. I don't know what it's like here in the US, but generally globally, the only energy source that doesn't have an organized lobby against it is solar. Yeah. You think about it. That actually makes a difference. But also, solar has the capacity, it's already reaching economic parity in some places. And at volume, if encouraged, it can be perhaps a third of the cost by 2030 as it is now, and begin to come through. But then, another aspect about time that sometimes people neglect because they don't appreciate the global scale of the energy industry. So if there is a breakthrough that is not only technically feasible, but economically feasible, and so it begins to grow globally by 25% per year. You think of an industry growing by 25% per year, with all that means for not only supply chains and training people and all that. 25% per year for 30 years, cumulative, year on year, will get you about 1% of the global energy system.
It's amazing.
That's the size of the system. And so you have to think of global scale developments in terms of decades. So if you're thinking about 2050, you already know the cards that are in your hands that are going to play out till then. That doesn't mean you take attention off all the new things that will have an impact in the period 2050 to 2100. You still continue that, but just appreciating what that is. And so even in these circumstances where all the conditions line up, and I mentioned solar as the example, you still see solar being part of the mix, but becoming the biggest part of the mix only from about 2060 onwards.
But I just want to interrupt because one thing that you said, if your scenario includes that reality, I mean, as a hard fact, and if you did the same thing with nuclear, in other words, this is the wedges idea years ago, Rob Sokolow and others said, suppose you did this chunk of nuclear, this chunk of solar, this chunk of transportation to address carbon dioxide, essentially you can't get there from here. I mean, it leads to a very clear sense that we need either direct capture of CO2 from the atmosphere at some point, or the geoengineering word starts to come up, which is another board. How could you have a scenario that doesn't include that if you want to limit climate risk? Is there a way?
Well, I think that we're going to do some work, and we'll talk about that more in the time when we've done it, around going beyond the mountain's boundary to what is imaginable, although almost unimaginable, to look through those areas. But each of these outlooks actually has greenhouse gas emissions from the energy sector being zero net by the end of the 21st century. Okay. The problem is essentially you need it by the middle. Right. And so that's the challenge of time there. Yeah. But you see that the way it can become net is also through carbon dioxide capture and storage and the increasing use, for example, of biogas and biofuels combined with carbon dioxide capture and storage, which is a form of extracting net CO2 from the atmosphere. So there are ways that are already fairly well understood to begin to have that overshoot and reset.
Yeah. I just want to add one small piece to this because I could tell by the way you asked the question that you're aware of this, but I think one of the risks is in a push towards renewables, a very strong push towards existing technology and capabilities in renewables can have the effect of squeezing out natural gas. And if your perspective is really from a global environment perspective and CO2 emissions, you have to be really cautious about that one, certainly over the next couple of decades, because gas replacing coal is where you get the big benefits. Yeah.
Let's shift to a lightning round kind of situation. We have about 10 minutes left, and I want to make sure we get some questions in. Let's take 2 questions now and have a quick set of reactions, 1 person per point, and then we'll do 2 more. So you have the mic, right? Yeah, and then.
Thank you. Your analysis is really fascinating, and when I think out to 2050, based on your comments, the food, water, energy, stress nexus, a concept I've never heard, but it sounds brilliant. Does that mean, for example, that if we were successful in getting some combination of solar, wind, or whatever, to make our power grid completely green, and we had great batteries so all cars could be electric, that you would consider in your sandbox that problem is now solved? Or would you also be looking at the fact that we'd be building lots more cars and batteries and other things, and that has a carbon footprint and an energy footprint and a water footprint? So do you look at it globally that way? And also out to 2050, do you think about controlled fusion? Greatly overpromised and hasn't delivered, but if it did, does that get into your calculations?
Let's take one more question. So I made a note about that. That's kind of a broad one right there. And while he's getting the mic, I'm just going to say, Michio Kaku, who's kind of a pop physicist, he recently said, fusion really is 20 years away this time. 20 years away. Yeah. So, it's always been, but he says this time it really is 20 years away. So
all part of being prepared, yeah.
Yeah, so next question.
Mine's a rather different question. I'm interested in your comment about working closely with the Chinese. It strikes me that there's a vast difference between your approach to decision making and theirs. Yours involves a breadth of vision Theirs is guided heavily by ideology. Yours involves a great emphasis on flexibility, whereas their system suffers from political rigidity. And I'm interested in how you feel your work with them may develop over time in light of those problems.
Yep.
So maybe, again, we have two questions, so see if you can dive in on the first one quickly first, and then.
Well, I'll just pick up on the Strex-Nessus piece, and you pick up on the other, which I think you characterized it exactly right, which is its understanding if you're purely focused on CO2 intensity and emissions and so forth, that could drive you into biofuels and other issues, which can just exacerbate the problems in other areas. So it's very much a matter of us taking those cumulative impacts into account and choosing the best path forward, which I think maybe, again, to state the obvious, often means a different answer in different parts of the world. So there's not one answer that you can overlay on the globe and say this is what makes sense.
So I'll pick up on the fusion aspect. It'd be very interesting, and then I'll pick up on the China one.
Yeah.
It'd be very interesting. I nearly did my PhD in fusion 30 years ago. Right. But I didn't. I eventually did elementary particles, but I nearly did that. And in fact, I know we still give awards into the fusion developments, and actually there have been some quite significant developments. But it comes back to that point I was making earlier. Even if it became economic in 10, 20 years' time, it's only going to be noticeable on a global bar chart by 2070. It just takes so long for power station capital stock to turn over and for these things to come through. On the renewables as well, and for those who are interested, we've worked with people like Ecofis, a well-known NGO in this area, around the capacity for renewables. And we try and squeeze each and every way possible. And it becomes very, very hard to get a world with more than 70% renewable energy for various reasons, partly because the renewable resource is often a long way away from where the consumption needs to be, and you have to have all sorts of systems through there, partly because as we think of renewables, we're normally thinking of electric renewables that lead to electricity, but not all things can be powered easily electrically, the electric aeroplane, et cetera, et cetera. So that's another factor that comes in there. And then finally, there are all sorts of issues around the fact that production understanding and technology developments have gone much faster than storage. And so storage becomes a limiter in how far you can go. So that's just a little bit of the background in the thinking on renewables. It's covered in our scenario work if you want to have a look more at that. Now, coming perhaps to the China point, it's very interesting working with some of these very leading people in the Chinese policy area. And our work is going to be presented to Li Keqiang in July by the head of the policy think tank as a great present. So it has been useful, close work there. Around the table, you have open discussions, as open as you can imagine. People recognize what the issues are and what the challenges are. And in fact, I wouldn't classify those discussions as being colored by ideology as much as pragmatism. There's just a degree of just pragmatism. What is going to work or what isn't going to work? I mean, clearly, behind that, there's a sense of a core belief in the importance of the stability of the current political architecture. So that's kind of core behind it. And how can you address wherever you are, whether in the US or the UK or in China, there are always vested interests in the status quo. So how can you address those? So these are the kind of active questions. So it's not quite as you might think once you kind of get in there. But within that, it's not certain that the kinds of reforms that they know need to happen, are they going to have the policy levers to be able to make happen?
I just have to add my simple version of that, which is despite all the differences, there's an absolute common fundamental element of how do you supply energy at low cost in a way that has the least impact on the environment. And that's a common element that allows all this work together to go forward.
So let's take two more. I think we can fit in two more state quick questions, and then, because we only have 5 minutes left. Where's the mic? The pink shirt and the guy over there. So state your questions. Actually, let's do three, just because you had your hand up too. But really quick, make them quick.
As you talk about solar becoming the primary source of energy by 2060, could you talk about how we deal with the intermittency problem and get to some kind of baseload capability out of solar?
Okay. Yeah. And then
I'm interested in whether the scenario work you're doing has helped you at all to figure out how the company ought to position itself in terms of political positions. For example, you talked about advocating for a price on carbon for quite some time, but there's ways of doing that. There's carbon taxes, there's carbon trading. Yeah. Carbon tax might be the ideal, most flexible, but it might be the most politically unrealistic. So I wonder whether the scenario work helps the company figure out where to position itself and how to guide policymakers on those kinds of questions.
Okay, so then your point, and then are there any women who have a question? I just want to make sure. All right, I couldn't see. All right, and let's get yours too, and then we're done.
Just real quick, you're doing R&D on oil shale about 100 miles from here. I'm curious how that fits into your portfolio in the next 30 years.
Okay, and then so here.
Very simple question. What is your economic outlook for China over the next decade?
Prediction.
All right.
So I have made some notes.
Yeah.
So if
you've got storage in China.
Yep. So shall I kick off with the storage in China? Okay. Indeed, as I was mentioning before, storage is an issue, and there is a complementarity in the mix. When we talk about 2060, solar becoming the biggest single primary energy source, it's combined with things like growing gas, which is part of the way of buffering that. And then you can think of the other technology areas. If you're in a world with abundant natural gas, then that is the most efficient route towards hydrogen manufacture. And so you can get hydrogen as a buffer infrastructure in your systems, both heading towards power, but also into the hydrogen fuel cell vehicle type of route as well. So there are different types of combinations that are there. On China, we don't make a single prediction. We have scenarios on China. And really the next 5 years are pretty critical in the Chinese developments. The development as to whether they are able to, in this political round, this next 10 years, really bring in the depth of banking and financial reforms. Whether indeed they're going to be able to accommodate some of the pressures upon them and avoid all those factors that lead into middle income type traps. I mean, when we think about a growing economy, we think about a growing economy. But behind it, of course, a whole set of more and more complex relationships. So you need legal reforms and market reforms and banking reforms, all these things. And so in the next 5 years, you could see a China which is continuing at the kinds of rates you're currently seeing, or a China that falls a couple of percent below that. And that also creates a whole set of political and social dynamics as well. So I'm not going to give you one answer, but we see that bounding, and we see the difference becoming apparent, actually, in the next 3 years as to how that would play through.
Okay. A couple of quick comments on the policy piece.
So the last seconds here.
Because it absolutely informs our policy. I'd say, as a matter of fact, the vast majority of our advocacy comes from the thinking deep into the scenarios. But on the point of CO2 and a price on carbon in particular, so we come out very clearly with what we think the right approach is. And the right approach, one way to say it is cap and trade. Maybe a better way to say it is some market-based approach where you get those market dynamics driving action as opposed to something like a just straight tax. But it also comes from the point of view that says we don't make that choice. You know, governments in difficult positions are going to be the ones that are going to have to actually make that choice. So fall back on the principles behind it, meaning as market-based as possible is a good thing. Make sure you get the result that you're wanting to get. So don't put a price on carbon and just raise a lot of revenue and spend it on something else.
Right.
You know, it better actually be being spent on reducing the amount of CO2 emissions and so forth.
Which gets to the economic outlook question.
Mm-hmm. Yeah. So you'll have to remind me.
Well, the outlook for the economy generally. I think that was your question.
But that was part of the China piece. But I think there's one other element of the advocacy that we should just touch on, because you know, we speak a lot about the importance of natural gas, you know, in this continent and globally. We also recognize that's not just as simple as saying produce more natural gas. It's all about doing it the right way. And so when we define what we call our operating principles, or work with a number of NGOs and other organizations around developing principles for how to develop this natural gas, that's our form of advocacy for what should actually show up in the regulations on a state level basis, and define how this work is done.
Well,
Marvin, the final question, if you just want to touch, was on shale oil.
Oh yeah, sorry,
right.
shale.
Yeah.
So I think what won't surprise you at all is that we keep a vast portfolio of opportunities, you know, depending on various scenarios in the future, working in our company. So some of that research and development we do ourselves, and that's exactly where I'd put the shale oil type of research that's going on now. So relatively low level R&D funding, so that we understand what the potential is that in the long term if those resources are needed. We have the same sort of approach, almost a venture capitalist approach, where we put seed money out in various places through universities or entrepreneurs and so forth to stay in touch with different technologies that are developing. So I'd put it in that category.
well, this has been a great hour. Thank you both for your contributions. And you talk about, one of the great lines in the analysis is about the difference between trapped transitions or room to maneuver. And having a flexible, adaptive approach that re-examines questions periodically is really important. So thank you again.
Thanks, Andy.
Thank you all for your questions.
Thanks a lot.